Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for December 7th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you see here is price holding above 2185. 2185 has been a key level for us for some time. 2188 is important. We knew that rotating into the zone would bring buyers back in for a shot at retesting these highs, and this is where the things get very serious up here, because now we're either going to see a rejection of these highs or we're going to see price push through them. If there is a rejection, for example, if price hits 2214 or above and then starts to push back below, that could imply that we're going to come back and retest these lows and perhaps trade a range. If price pushes through 2214 and holds and closes above 2220, then perhaps that means we're going to squeeze into the next upside key levels. We have some key levels that I haven't shown in a while, but 2240 is one I've been mentioning, and 2257 half. Those are the next two major targets above, and these are based off of longer term key levels, the ones that we've been watching for the past year, as a matter of fact, and then one from Brexit, I believe, the Brexit key range. So we have some important ranges here to reach. The Brexit 100% will be the 2257. That's from that high right there. And so that's a 100% expansion. So 2240 is a big time level, 2257, but again, it all starts with 2214. What's going to happen at that level? Is price is going to reject, which is going to cause a ripple against the current move, or are we going to hold and push through? We'll see. Right now, I'll keep an eye on 2240 and see how it plays out. As long as price remains above 2180, overall this thing continues to be poised higher. Every pullback has been a buying opportunity, even if it's been a 1 or 2 day sell-off or longer. It's still been a buying opportunity, so still a quite bullish market. Let's take a look at the intraday time frame. Here we go. On an intraday basis, it's always interesting to me to watch to see what has happened at the white dotted line since the previous session's close. The white dotted line is the previous session's close. You can see immediately it goes offered in after hours. It tries to hold above it and offer it again. So right now we're seeing rejections up at the 2213s at the previous session's close. We have VWAP starting to curl down. VPOC went offered. So right now, if this thing pushes up into the zone and continues to go offered, perhaps price wants to retest 5-day VPOC at 2202 half. So that's 5-day VPOC right there. That could be the next test down if price continues to fail to see acceptance above the previous close here. Remember, 2214 is very important, so should price get into that area, there's been rejections. It's been very thin up here, so watch it very, very closely for acceptance. Otherwise, we could be rotating right back into 2202, followed by a retest at the outer edge of the previous session's range at 2200. Okay, let's take a look now at crude oil futures. Here's crude oil. All right, so there's crude oil. What we're looking at right now is a daily time frame and another rejection off of 52s. We saw our last rejection here. It was a great one. I mentioned that after that pullback right here, we were looking to see if bulls could come in, and bulls failed on this day. And once that happened and stops came out, it was clear we were heading across the range. So right now we've seen another rejection right here above 52. We see the midpoint of that bar is about right there. That's about right where the high of yesterday's trading was. And again, that's always our primary area. That's what we teach at PivotBoss. If you have a rejection day at a clear area of rejection like 52s, we're looking for a midpoint retest for an entry against the range here. And this thing already has played well off of that zone. That doesn't mean it's going to continue all the way down, but that gives you the best entry trade location. And now from there, you should be able to scale and get to break even and those types of things. Right now, 50 to 52 could be an area where we continue to do a little bit of business, as I mentioned before, but eventually we're going to have to break either through 52 or rotate back across the range. So continue to watch this very closely. We're seeing rejections at 52 already. So if we do bounce, watch for signs of further rejection that could get you into a move that returns back to value at 46.69 or thereabouts. On an intraday basis, here's the intraday. What you'll see here is, again, I always like to look at the white dotted line, the previous close. Price got above it, offered. Price tried to hold above it again, offered back down. Now we're retesting the previous session's low, and we're holding at that zone. So right now, trading range day, you're seeing fading of the edges. So here's a high, got to a new high, faded, retest of that high, and drops. Here's a low. We're at it right now. This could mean another bounce back up. So right now it's been a trading range market where the market has seen fading of the edges. We have a clear range that is built out since yesterday's market as well. So say 51.20 down to about 50.20. And right now we're seeing a little bit of this action. Overall, as you know, crude oil has continued to trend downward for the most part. Going back to the daily time frame here, you can see again, this thing has pulled back from these highs, and now if it can't reestablish above 51 here, it's going to put a lot of pressure on 50 and perhaps lower. So 50 is going to be very important. So again, we have to watch this range. We have a clear trading range. We're looking to fade the edges, but 50 is a very important level down below. So if it breaks down below 50.20, watch 50 right here, and that's also just near the 25% day expansion level. That could be an area where you could see some sort of swift rejection back up if bulls come in to defend that area or price is just below it. All right, let's take a look now at gold futures. Here's gold futures. You're looking at the pivots here. This one I've mentioned you have to be very, very careful with. We're seeing a lot here in the form of a downtrending price discovery market. We're seeing areas where bulls are really trying to be eager to find a low, but they're being overcome by eager sellers. They're being absorbed, rotated lower. Right now we have a very narrow range over the last two sessions, about as narrow as you get. Yesterday we closed the day with 6 or 7 point range. Today we're trading about 9 points. That's 50% of ADR over the last 10 sessions, so it's very, very tiny. 1180 is very important. 1200 is important. I've mentioned before that just getting down into the zone, we got to let it do its thing. Stand out, stand away, let it do its thing, and if this eventually can push back above 1200, it's going to be a swift move back to 1263. Otherwise, if it can never get back above 1200, eventually we could be looking at a continuation back across the larger range into 1060 or 1050. So this is a very important pivot, a very important rejection point in the charts, and right now we just got to let it do its thing. Very, very tight price action, almost diamond shaped, and again, that's very difficult to trade. So you got to stand away on a swing basis, just kind of let it build out, and then eventually we'll see which way it's going to go here. On an intraday basis right now, just for those of you trading intraday, we were able to find some of the range was very narrow. We talked about it pre-market, and we traded that little narrow range. But right now we've kind of widened it out a little bit, and it's still in play. So here's a rejection at the edge yesterday, and boom, right? Yesterday's edge, pre-market rejection. Here's yesterday's edge up here. It could be another fade back down. So the trading range is still in effect for now in gold. Lastly, let's take a look at the NQ. Here's a look at the NQ with the weekly PivotBoss pivots. We continue to hold within the larger trading range. You can see an expanding range like this. You can see most of the meat is inside that range, and we're just inside the meat of that range right now. It's very hard to swing trade that at the moment. What I did mention yesterday was this previous high right here wanted to be defended if bulls defended it. If bulls came into it, if price came into it, you would see bulls defend it. And it didn't quite get that low, but bulls did defend and close near the highs. Right now we have an inside day, double inside day that's building out. Again, anytime you're inside this middle meat of the portion of the trading range, it could chop back and forth over and over. So it can be very difficult in here. It's much easier to wait for the edges, as we did up here, and drop it downward. And then you wait for the edges at the opposite end. So right now, got to be safe and careful here for the most part. I think all pullbacks are still big time buying opportunities. Above 48.06, 48.04 easily squeezes back to 48.40 and 48.80. And again, we could be looking at another opportunity to push this thing back against the range. All right, let's take a look lastly at the intraday time frame for the NQ. What you see here is price again, the previous session's close, rejected so far, and price dropping. That's usually bearish. So if we see price bounce into this zone, it could be an additional area to sell. For a push to the outer edge of the previous session's range at 47.6775, that could also lead to further downside movement. Again, this 47.60 is very important. You can see the LVN, you can see support above it that's held throughout the session yesterday. Very clear trading range. You can continue to fade the edges. That was the goal, fading the edges, fading the edges, fading the edges, right? So it's still a fade the edges type of range. I would say if price got into 47.60, it would be even better to bring it back up. So keep that in mind, but it's a fade the edges type of trading range market right now until proven otherwise. And at some point we will see expansion from this range, but for right now, fading the edges is the best approach until proven otherwise. Any failure to hold 47.60 could get bearish very, very quickly. All right, that's it for now. Let's see how this plays out the rest of the session. Good luck and trade well.